Hello, and welcome to Pro Trader Strategies Market Commentary for Monday, May the 22nd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we're talking about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not really a whole lot of economic data today, as it being a Monday, but we do have a lot of other information. It's going to be kind of like trade the news. We have Harker speaking this morning. We also have several other Fed governors speaking. We have Bernard, Kashkari, and Evans speaking all today. So quite a bit of Fed governors speak. A lot of people are going to be talking about Fed fund futures and them pricing in future rate hikes. So keep that in mind just to see what they're talking about with the economy and things of that nature. See if there's any nuances that they're talking about in order to give us a little bit of market direction. All right, so then on to crude oil futures, up slightly on the day by about 40 cents. Looks like they're taking a bit of a pause after the last couple of days, big rallies, back above $50 a barrel. So, but it is, as you can see, slowing down in momentum as we near this value area high. You start getting further and further away from this point of control where the most time and volume's been spent, where everybody is really comfortable with it. It's going to have a tendency to slow down, or if it gets through this area, it probably will come back up into this $53 mark. So that is what we're keeping an eye on right now to see if the market kind of loses a little bit of momentum going forward. We are starting to see the 50-day and the 200-day crossing over. So that is that bearish sentiment in a sense. So keep that in mind as the markets, or as these two lines cross over, that it is becoming more bearish. These bulls need to give this market some momentum to the upside and get up probably above $54 a barrel and settle there in order to kind of break that whole trend of a downward cycle where we have lower lows and lower highs. So the lower highs being here and the lower lows showing this. That is a typical bearish sentiment. So crude oil not out of the woods unless we get above $54 a barrel for all intents and purposes. On to gold futures, they're up on the day despite the fact that equities are pushing higher. Gold futures up about $6, but at the end of the day, we are very close to this point of control, which is where the market is most comfortable, where the most amount of money has been changing hands, buys and sells. Bonds also slightly in positive territory, albeit only by 3 ticks. Could start seeing with some of these Fed governors talking today that we see a little bit of push to the downside if they start talking pretty dovish and continuing rate hikes, or a possibility of higher hikes than what is anticipated by the overall market. Then with the Dow Jones Industrial Average up almost 100 points, value area being created right here for the time, or not necessarily the time. Time's been spent down here, but the most volume that's been traded is up in these levels. So gaining acceptance there. Then with the NASDAQ up also on the day by 42 points, continues to push higher. As a matter of fact, I talked about this on Friday about the market showing a bullish sentiment, at least for the near term. So market cruising higher again today and confirming that. Actually, it was actually confirmed on Friday with both the E-mini S&Ps, the NASDAQ, and the Dow. But today, validation of that confirmation, I guess, for lack of a better phrase there. But the E-mini S&Ps up about 10 points on the day. This is the day chart breakdown on a 30-minute segment, 20 days past. The overall market pushing higher again, as you can see. As soon as we got above the value area of yesterday's trade, the market really started pushing even more so higher. Might have been due to overnight inventory being short and the market pushing higher. Onto a few trades that I've done. I actually talked about this trade in the webinar on Friday with regards to synthetic shorts. So it's like taking these underlyings and getting short them without having to go out and borrow the stock and pay dividends and things of that nature. Plus, it's a lot less margin intensive, especially for the trader. If you're not looking at this as a really long-term trade, even though we're going further out in time, the reason why we're doing that is for better pricing. So we are probably going to hold on to this for a real extended period of time. As a matter of fact, I'm going to be looking for Halliburton to at least come down and test the point of control, which is where it's going to find comfort. It seems like it's a little bit overdone, and this is a pretty steep down cycle for this, so it's going to be very difficult for it to break through that. We're also seeing the crossover here of the 50-day and the 200-day, which is more bearish sentiment. That being said, we have an engulfing pattern here, a lot of things lining up with this particular trade here, and we could even easily see this go down to $41 for Halliburton, ticker symbol HAL. So because of all of those reasons combined, also it was a perfect setup for what we talked about in the in the webinar on Friday about synthetic shorts. I decided to go into the September, and the September, what we're doing is selling the 47.5 calls and then buying the 47.5 puts. So that creates that synthetic short. I've got short 100 deltas in this by selling the calls, which was a 49 delta, buying the puts, which is a 51 delta. Put those two together, we have 100. That makes me synthetically short 100 Halliburton, ticker symbol HAL, for every one lot that I've done. And I paid a 57-cent debit for that. Now, the reason why I did that, it was actually a little bit lower when I initiated this trade, but if you take the 47.5, subtract that debit I paid of 57 cents, my break even on this trade right now is $46.93. We talk about all those nuances in that webinar, so you can go to protraderstrategies.com and sign up for that to get all of the details as to how to set that strategy up, what the break-evens are and everything like that. But at the end of the day, I am now short Halliburton, synthetically short Halliburton stock. All right, so on to Dow Chemical. This isn't one that I would always recommend for the traders. It kind of bends a little bit of my rules on the bid-ask width on Dow Chemical, but it has over 50 implied volatility percent. It also is breaking down. It's gone inside of this value area again, breaking down below that. I should expect it to want to come down and at least test the 200-day moving average here now that we're below that. We also have a big candle here on retracement. It looks like it's going to settle back in there, so I'm looking at it as this is a very bearish trend line here and looking for it to pull back. So with Dow having high implied volatility percent, decided to go in there in the June and sell the 62.5 calls for 71 cents. So looking to get out of that for 50% of my max profit. All those things kind of set it up a little bit as a bearish trend. These are a couple of stocks that aren't really participating in this rally that we've been seeing across the board in equities, so it's a nice way to add some negative deltas to the overall portfolio. That's about all I got for you guys today. Go to protraderstrategies.com, check out all my videos, sign up for the daily market commentaries if you are just viewing this as a guest, if you will, and that's about all I got for you guys. If you can't take that, take it easy.